Now you're focused on buying and selling process, but the inverting. Howard, take us back in your own career for a while and talk about why you chose to go to Wall Street, how you ended up at Citibank when we met each other.
Well, you know, I started off, my dad was an accountant, and I thought I'd become an accountant. I actually took accounting in high school and liked it. And I didn't admit that when I was in high school. But so I went to Wharton, and I figured I'd take a degree in accounting, but then when I got there, I started to study finance, and I found it more interesting, so I shifted over. Then I went to University of Chicago for a master's degree, and that was in accounting. And when I got out of there, I still didn't know what I wanted to do, and applied for 6 different jobs in 6 different aspects of finance. But I had a good summer at Citibank the year before. I liked the people, I liked what I did, so I went into investment research, and it was nothing more, wasn't a much more conscious decision than that. And that was, that was 1969. Started off in equity research, and then became director of research. And the bank engaged in what was called Nifty 50 investing. It invested in the best and fastest growing companies in America without regard to price, because the official dictum was if it's good enough and fast growing enough, it's worth any price, which is kind of the opposite of what I think you believe, Michael. And if you bought the Nifty 50 the day I got there in '68, and if you hold it diligently until '73, you lost almost all your money in the best companies in America. And there's a lesson in that, of course, that it's not what you buy, it's what you pay for. But then in '78, because that exercise with which I was associated was so unsuccessful, it was time for me to find a new job. I was lucky I didn't get canned, and I switched to the bond department in order to manage money. And then in August of '78, I got a call from the head of the bond department, and he said, there's some guy named Milken or something out in California, and he deals in these things called high yield bonds. And can you figure out what that means? Now, you know, we take it for granted today. We all know what they mean, and actually high yield bonds are quite mainstream today. But in those days, they were an obscure corner that very few people knew about. They were called junk bonds. And so I set about trying to study them. I met with Mike in November of '78, and then came out here to California to visit with him in January '79 for the first time. And now I'm investing in the worst companies in America, and I'm making money steadily and safely. And there's a really important lesson in that in good investing is not a matter of buying good things, but buying things well.